thank you so much, Muneeb, for coming and taking the time to walk me through what Blockstack is. From everyone's perspective, Muneeb is the CEO of Blockstack, which is known as the STX token. It's a digital asset primarily designed for regulatory approval and for targeting family offices or more sophisticated investors. It operates on top of Bitcoin, so it's a smart contract platform. But before we dive into that, Muneeb, I'd like to essentially get a quick background and update from you, just telling everyone who you are, and then I'd like to kind of overall understand what the overall where your asset and Bitcoin in general fits into the global macro equation that we're in right now, and the convergence of the credit cycle and essentially where we are at the point in time with negative interest rates. And then from there, I'd like to understand why your particular digital asset, what's so special about it.
Awesome. Well, first of all, thanks for having this chat with me. Always excited to kind of like, do something in Pakistan and try to educate people more about what's happening in crypto and the kind of like the next internet that we are seeing the early stages of right now. So first of all, a little bit about myself. I grew up in Rawalpindi from a army family, and got into LUMS. And back then, you can imagine how excited you would be to go to a university that you've always dreamed about. And I do think it was a very exciting time. This was 1999, and the first internet.com bubble hasn't burst then, right? So a lot of people were working on new ideas, new startups. So kind of experienced that a little bit from afar. Obviously, Pakistan is a different kind of like an industry back then. But I just remember spending a lot of time online and on the internet, and just got really excited and interested in doing research work, right? So most of my work at LUMS, and then after that, I was on the track for doing my PhD. It revolved around new internet protocols, right? So got into cloud computing, like basically 10 years since like my undergrad, like I've basically been doing research work in working on new types of internet protocols that are either more secure, more scalable, or they're improving the state of the art in one way or the other. So did my PhD at Princeton and discovered blockchains around 2013. So to put this in Bitcoin terms, Bitcoin was trading at like $90 back then, right? And that's when I started purchasing Bitcoin just as a personal investment as well. But mostly, I think the interesting thing there was when I discovered the technology, it really felt like this is by far the biggest delta shift in the technical landscape since the early internet, right? Like it's like a rabbit hole, and the more you discover it, the more fascinating it becomes, and the possibilities are kind of endless. And to put everything in perspective, the industry at that time was very small, very excited about what was happening, but it was a very, very small industry. I think Bitcoin was a couple of $1 billion market cap or something like this. Today, Bitcoin is $250 billion on market cap. Bitcoin is like one of the, I would say, fastest growing unique assets out there. And it's not just the asset itself, it's actually the technology that's underneath. Like I think it's safe to say that it can potentially transform the entire financial industry, like how banks operate, how lending or different types of settlements happen, what type of financial products get made. But at the same time, the same technology is also dictating how the next generation cloud computing works, right? On both sides, it's giving users more control. So both on the financial side, but also on the application side, like the next generation cloud would actually have users more in control of their own information. And both those things start to merge in these crypto networks.
Excellent. And it makes a lot of sense as we're moving to a world from where basically data is the new oil. I think you hit it right on the dot, where the new web is basically, and we've had all these issues around data in general, right? Corporations and everyone just using data arbitrarily. So I think it's really going to redefine how we move forward in terms of users having control of data potentially. I'd like to educate our audience a little bit more on the global macro scenario, because I think as you mentioned protocols, I always say that the internet was built on various protocols, and the TCP/IP layer being the first, and we were bound by basically the amount of data that could, the bit rate at which it could move. And so then you basically had multiple layers on top of that each time, whether it was voice over IP, video over IP, and now essentially what we're in is the exchange of value protocol disruption, which is the merger of monetary exchange and the internet. Um, from a global macro point of view, given where we are in the world today, with negative interest rates to near zero interest rates in developed central banks, and essentially everybody in a risk-on environment, so that creates essentially an environment where more and more institutional players are going to have to start to look at hedges against currency devaluation potentially in the future. I guess if you could kind of give us a backdrop of what role you think Bitcoin is playing. From my own perspective, I believe it is digital gold. Of course, that's speculative. Obviously, with the intercontinental exchange getting into the play, and some of the bigger players also recognizing Bitcoin as a digital asset, I think it's indicating more and more in that direction. But since you're doing a smart contract platform on top of Bitcoin, that will essentially allow some level of yield. What is your perspective on Bitcoin, and what's exactly about to happen to all of our, I guess, financial assets in a way in the coming few years?
Yep. So I think to understand Bitcoin as a protocol for value, I think it's important to basically have some sort of an analogy with the internet, like in the sense that I remember growing up in Pakistan. We had PTV, right? The state-controlled channel, and I remember the first private channel was, I think, STN or something like that. If I remember the name correctly, and PTV was completely controlled by the government, right? So any information you're getting from there, it's dictated or at least guided in a certain way. And compare that to the internet, which is not under the control of any single party, and it's free flow of information, and you can get your information from any source, right? Right. So now imagine that any government-backed currencies, they're a little bit like PTV, right? Like they are actually controlled by the government. The US government recently has been criticized a lot for effectively printing a lot of money, right? Like whenever there's a financial crisis, there's a meme in the Bitcoin community that the money printer goes brrr, right? So they start printing more money. And the interesting thing is, I think growing up in Pakistan, we are actually used to seeing a kind of like inflation or the value of our local currency, Pakistani rupees, kind of like devaluing over time. We just almost take that for granted. It's not a question of like if that would happen, but how much would that happen, right? So if you want to do savings,
priced into decision making, I think in general in businesses, everyone's
exactly. Right. And if people want to have savings or long-term investments, they would either go to property or they would, try to buy up US dollars or British pound or something and try to have their savings that way. Right. So I think it's a well understood concept in Pakistan, but it goes a little deeper because the currencies that you're trying to exit to, for example, USD, they are themselves losing value. Right. And in many cases, losing value pretty rapidly. And you don't see that because there was a very interesting chart where the chart was actually trying to price the New York Stock Exchange and NASDAQ in gold versus the USD. And you would see that the gains are actually not that much, right? The reason why the gains look so much more pronounced is because the US dollar has actually lost value, right? And that's why all the stocks are going up relative to USD. And it's particularly problematic when it comes to USD because it's the reserve currency of the world, right? Everything else is actually measured against USD. Whereas if you have a protocol, if you have a truly neutral party, right? Something like Bitcoin, that is not dependent on any government, that is actually, I think the concept is sovereign money, like money that actually defines the rules by itself, right? So no one can come in and actually change the rules. This is the only thing that people need to understand about Bitcoin, that no one on the planet can come in and change the supply of Bitcoin or change any any kind of a rule and basically say no print more Bitcoin or reduce certain amount of Bitcoin. Like no one controls it, right? So it's for the first time in human history, we have truly sovereign money, and I think the impact of that is going to be really profound down the road, because now we have something to measure the value of other assets against. So the interesting thing over here is Bitcoin is the thing that it feels like Bitcoin is going up in price. Bitcoin is actually trying to find its stable price, because it's going to reach a level where it is the reserve currency of the world.
I think
And
that's
other
$250,000. I think the market cap becomes equivalent to USD in circulation roughly. Is the number I've heard.
Yes, I think gold would be also a very interesting thing to look at, because if Bitcoin is the digital gold, then at some point, Bitcoin's valuation should actually be more than that of gold, because
Which is what,
it
10
serves.
trillion right now, roughly 10 to 11
Yeah,
trillion dollars in gold.
it's 10 trillion. So Bitcoin is still in the early innings. And another way to look at this is if you look at that as adoption, like how many people actually own Bitcoin or how many people actually use Bitcoin right now. I think it's like 0.5% or barely 1% of the internet. And it's only going to grow, right? Like the how many people there are and how they use it. So it's still very early days. And I feel like the impact is not just going to be that you have introduced this sovereign form of money that we've never had. The impact is also going to be that this money is programmable, right? So this is a little bit like going from paper mail to email, right? Like there's no going back, right? Like once you have shifted to email, once you're doing electronic uh, kind of like ways of using money, there's no going back, because developers are already taking this programmable money and they're building interesting things with it, right? So this is where the smart contracts come in, where the new types of financial products that are being built or new types of internet applications that are being built, they have this programmable money baked in, and your old financial system really look like archaic technology that is just going to disappear at some point.
Absolutely. It's and I mean, I love how you did that analogy right from the beginning with like essentially the television, state monopoly on television. Whether it was the BBC, PTV, all the regional players. Um, when we look at the internet, what's happened is in each step of the way, those monopolies have gone away, right? So you've got social media now, essentially disrupting the telephone connectivity is now basically democratized in WhatsApp and Skype and Zoom, the medium we're speaking on. And it's only natural that at some point money will also become democratized to some extent, right? What would you say to the critics that, and I fall in this bucket, that I don't think Bitcoin will ever be used as money on a day-to-day basis by individuals like us. It will be more of again, a store of value is what I believe it to be, from digital gold, as you aptly pointed out. So where would Bitcoin play a role in that? Would it be sovereigns that don't, for example, have gold reserves as a percentage of their GDP? We know Russia, China, India, Germany, US, are some of the main countries, Japan, that have some level of gold reserves. So countries like Pakistan that are susceptible to not having any hedges to the US dollar, as you mentioned, which is devaluing. Is that a component where you see it coming in? And then where do sovereign digital currencies come into play? As we've heard from the Chinese central bank, the European central bank, the Bank of Japan recently announced it, and then obviously the Fed has also indicated that it's working on a Fed coin, a Fed digital currency. So how does it fit into all that? And I'd like to understand how STX or Blockstack plays a role in that environment.
Yes, so I think let me divide this up a little bit. Let's first talk about some of these digital dollars or digital currencies by governments. So I think they give you certain benefits. It's a little bit like saying that you know um, a a government is upgrading their technology from paper money to this new digital format. So it will give you some benefits like faster transactions or better accounting and some of the benefits of just purely a technical upgrade. It is
Sure.
not going to impact the sovereign money side of it because the government still controls it. They can issue more of the asset. They can basically try to dictate the policies around how that money works, right? So Bitcoin is both. Like it's a upgrade of the technology, like you're going for paper money to digital money. But more importantly, and I would say actually emphasize that that is the real thing. The main thing over here is that it's sovereign, right? It really cannot, no one can come in. Like if there is a financial crisis like 2008, it's not that people can just print more Bitcoin and try to give it to large institutions. Like that just absolutely cannot happen. And I think that is the part that makes Bitcoin the best asset, uh, where the value of other things should be measured against Bitcoin, right? Because Bitcoin is the only thing that's not changing. Everything else is kind of like arbitrary, right? Like they can change the value of it. But going to your question about, Bitcoin is likely not going to get used for day-to-day payments. Like I'm likely not going to buy my coffee using Bitcoin on a daily basis. And there
fees are going to kill me. It's
yes, and it's because the transaction fees are high, and it's Bitcoin is like not. I think there was even like some disagreements within the Bitcoin community, and some people kind of like went away trying to design a different type of a Bitcoin where you can buy coffee on chain, and those efforts are really not going anywhere because it's not designed for that. It's designed as a settlement protocol. It's designed where you're moving large amounts of it, right? Like for example, you don't buy coffee with gold either, right? Like you're not, it's supposed to back the currency. It's supposed to actually be the reserve asset and not the thing you actually use. And there are price fluctuations as well.
In fact, it's hard money is very difficult for people to spend, right? It's worth more tomorrow than it is today. And
exactly.
It's the exact opposite with fiat, where it's devaluing, so you want to spend it today.
Exactly. So you actually don't want to spend it. So it's more like a savings account, right? Like you want to save as Bitcoin, and then there already are other types of technologies like the Lightning Network or some of the work that we're doing with the Saks blockchain, where you could actually do thousands of transactions that settle on Bitcoin. So those transactions are they give you scalability. Like you can actually buy your coffee or do other types of transactions, and then they're all settling back to Bitcoin. And then there are these stable assets, like USDC is an interesting example. It's a dollar-backed asset, so it's a digital currency, but it basically maintains its price at the value of $1. And I think
that's Goldman Sachs, right? Polynex.
Goldman Sachs invested in Circle, and Circle is one of the main players building that. And to give people an idea of how quickly these things are growing, USDC, I think in the last 5 months or so, went from something like 400 million market cap to 2.5 billion market cap, meaning that the market cap increases when more people are using it because they actually have USD reserves to back the currency. This is not a case that the government is actually issuing it. It's a private company that is saying that we have the same amount of assets, and you can issue a digital asset on a 1-to-1 ratio based on the assets that we actually keep in a bank. And then similarly, for Bitcoin, the core protocol is a little bit like passive capital. Like it's like your savings account. You just buy it and you keep it. But then there are smart contracts and the work that we do where you are enabling Bitcoin to be deployed into financial products. So it's a little bit like keeping money in a savings account with zero interest versus some sort of a sweep account where it can be transferred into different financial products and people can start earning different types of earnings or yields on it. And that's a massive market, right? Like imagine Bitcoin right now is something like $250 billion of capital, and that capital is just sitting there right now. And once people start deploying it in smart contracts, and this is what we do, we as a project are effectively we grow in harmony with Bitcoin. We bring certain features to Bitcoin that don't exist in the main Bitcoin protocol, and Stacks, the cryptocurrency, is basically used as fuel for these smart contracts. So it's a little bit like saying that if Bitcoin is the next version of money, Stacks is the next version of a Amazon Web Services, where all the computations require Stacks cryptocurrency for those computations to run. But this next generation AWS is actually plugged into Bitcoin, right? Like it's very native to Bitcoin.
So walk me through stacks in terms of, let's say, I'm a financial institution and I decide I'm going to keep 1% of my assets in Bitcoin, right? As you mentioned, there's no, just like gold, Bitcoin has no yield. It's hard money, so it's supposed to be a hedge against geopolitical events and monetary system issues. Um, so using stacks, I can, what is it similar to staking, where I would stake it in stacks and then somebody else would be able to write a smart contract? From someone like me, I'd be scared that, how is it secure that I'm actually now risking my Bitcoin by, giving it as collateral to someone else and then they're giving me a yield on it. But are they going to do fractional reserve lending on it? So just some of those, concerns that would arise from institutional. How would you address that?
Yep. So I think for this, we will have to go back to, how traditional, financial markets work. You're keeping your money with a bank, and then the bank would advise you to effectively, invest your money, or they would invest your money on your behalf sometimes in different types of products, right? So what's happening over here is that because you directly own your Bitcoin, there's no bank in the middle. Like there's this thing called private keys, and you can have custodians, but the model is very different. You are really the direct owner of the asset, right? Then the types of financial products that are available, they're not like some company comes in and says, hey, I've designed a financial product and give me your money. These are developed by engineers and developers, and they're very transparent. Like these are next generation computer programs that are publishing these smart contracts on a blockchain. And so they're very transparent, very much like auditable. And then money, because money is already digital now, kind of like moves into these smart contracts, right? I can give an example of a USD loan application type of a smart contract where people are giving collateral in Bitcoin and they're taking a digital dollar loan, and people who are basically helping give that collateral are earning some sort of an interest on top, right? But all of this is happening programmatically, right? These are computer programs in which you're doing it, and this area is like exploding, like literally, like in the sense that if you look at some of the growth that's happening just in the last 4 or 5 months, these protocols are going from basically zero to something like a couple of $1 billion within a few months, because it's just capital that is looking for yields and it's moving into these new types of products.
Are these referred to DeFi products or those?
Yep.
Is that
So decentralized finance or DeFi, what we do is we have designed a secure computer programming language. Our project was started by computer scientists at Princeton, where I did my PhD as well. And we have been working on a new secure programming language for these smart contracts. And the main differentiator that we have in the industry is that we are very tightly integrated with Bitcoin. Like both our blockchain or our smart contract language, everything basically benefits from the security of Bitcoin, and makes Bitcoin from a passive asset into an active asset, right? So it's easy to move Bitcoin into our smart contracts versus moving them on some other alternative. And then because we spend a lot of time on the security of these things, obviously, if people are keeping like hundreds of millions of dollars on a computer program, right, it's very important to be able to prove that there are no computer bugs in that code and so on. So our programming language is designed to do that, right? So you can actually have mathematical proofs of correctness that this program is only going to do what it's supposed to do. It's a little bit like code that runs in airplanes versus a website that can crash, right? Like these are, it's night and day, but very few people kind of like understand the differences between one programming language that can give you mathematical proofs or another one that is actually not that secure.
Yeah, absolutely. So walk me through how a family office or an institutional, how would they benefit from STX? I mean, just, there's a lot of people out there looking to go towards a store of value. Instincts tell us, a lot of the smart money that there should be in hedge. And as you mentioned, people traditionally in the eastern part of the world like property and gold as that hedge. And in the developed markets, I think the general consensus is yes, gold is important, but it has no yield. So everybody's looking to get that yield. You chose the SEC route, the regulatory route, to get approval. So, how is your token different from Ethereum or Cardano? Some of the other guys out there that are also trying to write smart contracts. And why would STX be preferable in many scenarios?
Yes. So I think, first of all, let's try to understand the difference between Bitcoin and Stacks, right? Stacks is actually not even trying to be sovereign money, right? We accept Bitcoin as sovereign money. And there is an interplay between Stacks and Bitcoin. So Stacks is basically fuel for smart contracts. I think if you take the analogy of real estate, Bitcoin is like buying the property, and you know that there is scarce amount of property, whereas Stacks is a little bit like the economy that gets generated on top of it, right? And what currency is being used on the economy that got generated on top of the property that a bunch of people bought, right?
Mm-hmm.
So the property might go up in value because it's scarce, but then there might be an economy that gets developed on top as well, right? So Stacks is that, because we bring smart contracts to Bitcoin. Bitcoin goes from a passive investment to a more actively deployed thing, and the bigger the market that develops on top of Bitcoin, potentially the bigger the Stacks project and the ecosystem, right? So these are two different types of assets, but they're interlinked because Stacks, if you lock them in our consensus algorithm, and I wouldn't go into the details, it's a fairly complicated consensus algorithm, but you can actually get a earning in Bitcoin. So it's an asset that's a little bit like, it is linked with Bitcoin, and you can actually earn Bitcoin by holding it as well. But the use of the asset is really in smart contracts. Like if you want to pay for computation, or if you want to run these smart contracts, Stacks gets consumed. In terms of alternatives, obviously, this is a rapidly growing industry, like something like 10x of the early internet or something like that. There are many players here, and Ethereum is kind of like the current main player for smart contracts. And then there are 5 to 10 other really sophisticated new projects that are also bringing smart contracts, and they kind of like differ from each other in various technical ways. But in general, the biggest difference of Stacks from everything else is we are bringing smart contracts to Bitcoin, right? Whereas everybody else is trying to build their own ecosystem. So they would have to, at some point, they would have to fight this battle of like becoming sovereign money. We actually think that that is the hardest thing to do. And Bitcoin by far is doing the best job at working towards that challenge, right? So we just ride the wave with Bitcoin. The more valuable Bitcoin becomes, the more valuable smart contracts around Bitcoin are, right? And we ride the wave with Bitcoin, and we actually think that there are network effects here. Just like in the early days of the internet, there were many different types of internet protocols or computer networks there. But then once TCP/IP, or what we today know as the internet, started taking off, everything just started collapsing into it. So we actually think that most of the applications of smart contracts you see out in the world, they're going to start collapsing into Bitcoin, because if you could do it in Bitcoin, you'll just do it on Bitcoin. You don't need to go in a smaller network. And that's how we differentiate from everything else that's going on. We've been extremely careful of regulations. Like in general, the crypto industry is a little bit like Wild West, and we have even starting from like how we started assembling the team, the kind of people we have hired, we're trying to actually help mature the industry. Like we're trying to get people who would not work in this industry, like the scientist, or even our CFO was the CFO of BlackRock Canada, to figuring out compliance and regulations. So we are the first ever asset that got qualified by the SEC, meaning that we did a fully kind of like compliant offering open to the US public, and we follow all of the procedures that you would expect from a sophisticated professional team to follow, versus the kind of like the inherent Wild West nature of crypto otherwise, where you don't even know like who's behind this project, and why are you investing in this thing, and it's driven by a lot of hype and speculation. And we're basically trying to do the opposite of that here, and trying to mature the industry.
Well, it's a smart approach. I mean, I think as we're seeing worldwide, as this market matures, it's going to get more and more attention from regulators, which it already has in many parts of the world. And I think that is the right approach. And as you mentioned, I do believe that 99% of a lot of these protocols or assets are going to collapse eventually, because there's really not that many use cases. So it's you have to, when you're speculating here, you have to basically literally do a lot of research and understand these assets. I'll come to more on Bitcoin. And, just the reason is, especially because STX is linked to Bitcoin. So then a lot of critics would say, and I personally don't believe that, because I think Bitcoin is very traceable in terms of the actual design of it. But the assumption always is that it's used for black money transfer and illicit capital transfer and trades. How do how would you overcome that perception for Bitcoin and then essentially the STX token, since it's written on top of Bitcoin? And what are your comments on that specifically?
Yep. So the way we design Saks is that it's a separate blockchain, and it connects with Bitcoin. So almost like, imagine that other projects are kind of like starting their own disconnected ecosystems, and we have a native bridge to Bitcoin, right? So we have built our blockchain like right next to Bitcoin, if you want to imagine that, and we have native connections to Bitcoin. So we benefit from the security of Bitcoin and so on. And in terms of like this idea of, the technology is being used for, money laundering or other type of like, drug sales and whatnot, again, it really reminds me of the early internet. Like when the internet was starting off, everyone was saying the only good use of the internet is going to be for illicit purposes, right? And yes, some of that activity happens, but by far, it is not the dominant use case. And I think that Bitcoin is already reaching a stage where, Paul Tudor Jones on Wall Street, like he took a big position in Bitcoin. Public companies are now diversifying their cash assets into Bitcoin. PayPal recently.
Where did PayPal announced that it'll be launching it, at least trading of crypto assets, Bitcoin,
Yep.
Litecoin, Ethereum.
MicroStrategy bought like $450 million of Bitcoin. They've actually made like north of $50 million on top of that already.
I saw
right?
that.
Like,
I saw that yesterday, the day before, when I hit 16.
So it's basically happening, right? Like imagine that right now you can count on your fingers how many public companies hold Bitcoin. And at one point it will be like everybody does it, because it's a hedge against, against a lot of things, not just the dollar devaluing, but actually even if there's turbulence in financial markets, the Bitcoin market can be an uncorrelated asset over there. Right? It's like we hold Bitcoin, and it actually sometimes we have to sell some amount to fund operations, and it pains me every time I have to sell Bitcoin, because I know that I shouldn't be selling this. It's going to be worth more in the future.
That's the problem with hard money. It's very difficult to get rid of it. In conclusion, I don't know if you can talk about this a little bit, but I'd like to understand the structure of how you operate. Is it a foundation format? And are you, contributing to the actual programming and maintenance of the STX token? And then, furthermore, I'm not sure if you can elaborate some of the people that have invested with you and what type of advisors you have. But that always gives confidence to me when I'm looking at various projects out there. So, again,
Yep.
what's your company do?
So we initially, structured as a company, like a typical Delaware company, went through Y Combinator, which is like the top startup accelerator in the world that has produced companies like Dropbox, Airbnb, and so on. And we were very fortunate to get some of the best investors in the world. Union Square Ventures, so Albert Wenger, the partner who sits on the board with me, he took Twilio public. He took MongoDB public. Both are, I think, north of $10 billion of market cap right now. And this is like going from a seed stage all the way to IPO. And along with others, Union Square Ventures is, arguably one of the best VC funds in the world, not just the US. And then we were very fortunate to raise capital from Winklevoss Capital, the Winklevoss brothers, Blockchain Capital, a bunch of top funds from Asia, And I can share more details, but we've been very fortunate to get the backing of the right investors, like who believe in the long term. We have also done our offerings in a very clean manner, in the sense that in 2017 there was a lot of like hype around these type of crypto offerings. A lot of these projects actually got enforcements from the SEC, got into other types of like trouble, and we've always been on the spectrum, like on the side of being extremely cautious, extremely careful. And I think that's paying off, right? And so we raised around $47 million in 2017, then around $23 million additional last year when we did our SEC qualified offering. And the SEC qualified offering basically meant that the general public could participate, even in the US. And with it's a little bit like a mini IPO, but it's for a crypto asset, and no one had ever done it before, and we had to kind of like figure out.
Are they still called ICO, or have they changed the name? I know the SEC was opining on that.
Yeah, I think the industry is, ICO, the term became a little bit dirty after, what happened in 2017. And also, so people were raising money just on hype and speculation. I think people are coming up with other terms at this point. But interestingly, like we started off as a company, but most of these investors, they're not investors in our company, right? Like they actually bought the crypto asset. So you're buying a crypto asset like Bitcoin. You don't have much to do with our company other than the fact our company was the main entity doing the initial R&D and building the core protocols and then building the public infrastructure. So one of the reasons why right now is actually a very exciting time is that phase is coming to an end, right? So we have built out the public infrastructure, and our mainnet is going live in roughly by mid-December or so. That's the current projection. And we've been preparing for this phase by enabling other entities in our ecosystem. So there is now a nonprofit Stacks Foundation, which is the long-term steward of the ecosystem. There is Freehold, which is a community-focused entity. There's New Internet Labs, another engineering-focused entity. So basically imagine that instead of a single company doing the bulk of the work, it's truly an ecosystem. We have more than 400 applications in our ecosystem already. And it's a set of these different entities that are going to contribute to the ecosystem as we go from doing the hardcore R&D and building the public infrastructure to everyone using the public infrastructure. So my own company is going to narrow its focus on developer tools. So we'll go from building the public infrastructure to building developer tools on the infrastructure. And it has very important significance for securities regulations in the US as well, that we've been working on a legal framework through which potentially trading can open in the US as well. And we'll be releasing more details on that before midnight. So we're very excited. I think in many ways it's still early days. Our market cap right now is something like $180 million. And to give you some idea, some of these competitors, which might have, less sophisticated technology or less sophisticated, compliance or teams behind them, they're trading anywhere between $1 billion to $10 billion today, right? We think it's early innings for all of us, but especially for our project, I think we're in a unique situation where there's no trading happening in the US right now.
What's the inflation rate? Is it tied to Bitcoin for STX, and what's the max supply?
Yeah, so I think the max supply, there are two ways of looking at it. One is what's the total number of STX out there right now, right? So it's 1.3 billion is the total, and close to 900 million is liquid, and more of them unlocked because we had unlocking for all the early purchasers over anywhere between 2 to 3 years, depending on how they participated. So 900 million STX is liquid. That's the 180 million market cap that I mentioned. So at the today's price of roughly 19 cents, it's 180 million market cap of that circulating supply. So more tokens are going to unlock. We'll go from 900 to the 1.3 billion number. And then the rest is mining, meaning that this is incentives for miners who are coming and running the nodes, processing the blocks, running the smart contracts. And that runs for a very long time. And sometimes people use the year 2050 number as a standard kind of like way of comparing protocols. So if you look at year 2050, the supply in year 2050 would be approximately 1.8 billion. So it will go from 1.3 to 1.8, and it will
It's very
like,
minuscule inflation, essentially.
yes, it's not that much, and plus the stacks holders, if they are locking up their stacks in consensus and basically running the nodes and providing certain services, they earn Bitcoin. So whatever, you know, quote unquote inflation is happening, you're actually getting offset by it, but you're getting offset in Bitcoin, which is a very unique property that no other protocol has, because we have we're the only protocol that has a consensus between two blockchains, our blockchain and the Bitcoin blockchain, and the rewards for the stacks holders are in Bitcoin, and everyone wants to earn Bitcoin, right? So it's a very interesting kind of a economic design where, and this is an interesting point to understand. If more smart contracts get deployed on our chain and more people are using the contracts, the Bitcoin that people are earning on their stacks holdings actually goes up, right? So the system is designed in a way that it kind of like grows in harmony with Bitcoin. Like especially if we are really successful, we can make Bitcoin itself more valuable, because now Bitcoin is going from a passive asset to a actively deployed asset, and it's more valuable. But as Bitcoin is becoming more valuable, because smart contracts are taking off, like on our platform, people who hold stacks are actually earning more Bitcoin, right? So it's a positive reinforcement cycle that is very carefully designed in our economics.
Amazing. You know, I wish in venture capital, what I'm noticing is that this is probably one of the most important revolutions that's happening in technology. Yet many times I feel like we ignore this entire ecosystem that's happening. I mean, we're looking at the downstream impact, and many times most of us don't even know why we're investing in those B2B platforms that are capturing economic activity. But it's really all driven by these back-end settlement layer changes and the financial structure changes getting digitized. So I really appreciate your input on this. One last question for you. I mean, you're from Pakistan, so when are you visiting Pakistan? I don't think I've seen you out here before.
I actually have been visiting Pakistan at least every year, sometimes even more than once for the past decade. I think with the virus, this was the first year that I haven't been able to visit so far, but hopefully that can change soon.
All right, well, we'll look forward to hosting you when you're out here. All right. Thank you so much, Muneeb.
Thanks for having me.
Yep,
Take care.
absolutely. Thanks. Bye.